Well, here we are, Monday. Market still in the same place. But that could change this week. A lot of big earnings. GDP, not as important. We're going to talk about it with Tim Quast at 8:35. This is pre-market prep on a Monday. Let's figure this market out. Roll the intro, Aaron.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right. Good morning, traders and investors. We're down 3.25 handles at 41.5350. If you were up at 3:30 this morning, you had a chance to buy the S&Ps near Friday's low, which was the low for the week. Coming back up to unchanged at 56.75. We have the dollar in the red by 16.2 cents at 101.39. Kind of pressing down on the lower end of a 6-day trading range. Bonds trying to find support just under 130 again. We're up 12.30 seconds at 130 and 9.30 seconds. Crude quiet down 16 cents at 77.71. Gold up 270 at 1993.20, trying to get back to the magic 2K level. We have silver back in the 25 handle. That's up 7.2 cents at 25.13. And Bitcoin futures getting a little bit of a bounce, up $225 at 27. 535. Let's bring in Triple D. And I guess Triple D, if you had to pick a Friday to take the day off or not trade as much, it was last Friday, boy. How about the quiet markets after options expiration?
I tried to trade a little bit again. I had the wrist injury there from my angiogram, so I was a little bit under the weather. I wasn't supposed to use so I was trying to trade left-handed. I did trade the close a little bit, but it was actually very quiet. So one of those days, Fridays, where you get an options expiration. Sometimes, like I said, it seems like 3 out of 12 a month, they're wild, and then you get the other 9, they're pretty quiet. This one was on the quiet side. Maybe the calm before the storm, because we haven't really got a ton of earnings. We've got Tesla, but we have a lot of earnings coming this week, Joel.
Yeah, we'll get to the Coca-Cola, which is having a little pop and a fizz here. But first, let's just do some overall market talk here.
Sure.
I mean, we got through the regional banker, most of the regional bank earnings. We got through the banks, and we're coming up on the mega cap tech, right? Those are going to be. But I mean, I looked this trading range for April, and I may stand corrected on this. I think this is our smallest monthly trading range since 2019. I believe it was back in March or April of 2019. You can see on this lower right chart here. I mean, this is a monthly candle, Dennis, right here.
Yeah.
That's a monthly candle. I mean, I know it's not good for for overall trading if you're a volatility trader.
No,
here.
it's not.
No,
and I feel it, Joel. And so far this month, and I have missed a couple of days here this month, but this is March was one of my best months in a long time because the volatility had escalated. You had a pretty good, just sell off to start the month and the wicked rally to end the month. Lots of movement, lots of range. And April has been crickets. We have gone nowhere, and I'm feeling it. And this is one of my slowest months in years. So it's amazing to go from a pretty wild month in March to a nothing month so far in April. Very, very slow for me, and very, disappointing to a certain extent. But I know, because I trade inefficiencies, I trade relationships, I trade, market movement too. When the market's not moving, you can't squeeze water from a stone. It has been quiet.
And your volume too is probably reflecting
dried
that,
up.
Yep.
Yes.
Yeah.
Volume very quiet. Same thing. And I mean, you try to press it. And the one problem, and I do this and every trader does this, is when it's slow, you take more chances and you press. And really that usually doesn't work out for the better when you're taking more chances. What you just got to do is grind out And sometimes the market's going to be slow. Sometimes, the VIX, and when the VIX is falling now, we've got it down to 17. I mean, it's much slower than when it's at 25 or 26, and much, much slower than when it's at 30. So again, wild March, sold off the beginning, rallied the entire end of it. And then April, we've just been sitting here doing nothing.
All right, so we talk. Well, we'll get to Coca-Cola earnings. We loved it. The old Friday afternoon, late Friday afternoon news dump, and Dennis, Citigroup had something to say about First Solar.
Yeah, and it wasn't really even a news dump because I don't know why the analysts want to put out their cool notes on a Friday night. Like, if you want people to pay attention to your note, throw it out Monday morning. But they are still paying attention. First Solar coming in downgrading, Citigroup coming in downgrading First Solar to sell, which always catches people's attention. Stock is down $5 here. A contrarian call, big time here, because you had a multi-year high in First Solar. Notice, Joel, I say multi-year high, because we remember back in the day, and you always correct me when I say all-time high, that we got back up in 2008, 2009 to $300 on this thing. So we are still not back to where we were 14 years ago, but it's been a really good couple of years here for First Solar. This analyst definitely bucking the trend, but I see the major resistance they're talking about up at 220. So they're making a call, trying to stand out. I like it when the analysts make contrarian calls. I hate the lemmings that just jump on. Company has good earnings. We better upgrade it now. At least, this analyst is making a call.
All right, so so you're a long-term investor, right? You've been in this thing a long time, haven't rung the register yet. We see it trading down 567. Technically, yeah, the price action from today is down, but it's a long-term trend. I guess you could draw a trend line off this 200 pre-market low. We did get close to this 210 area, 210.52. I think you got to give it a little bit more room than that if you're been a long-term investor.
Yeah.
I would say if you take that out, I would look at the next daily low at 205.48 as potential support. I think you'll find out real quickly off the open. Coming back up, you could easily kiss the bottom of yesterday's range at 213.21. So I'd look at that as resistance and see how much work you can do under 210 here in First Solar. But it's been one heck of a run for sure. So we talk about earnings, right? And Coca-Cola, big earnings out of Coca-Cola today. Let me bring up my sheet.
I've got it here.
You
But if
got
you
it?
want to
Okay.
show it, do you have the Pro? Because I don't know if you have it on your screen, if you can show it or not, but it doesn't matter if you can't. I'll just read it. It's a beat and a beat. So Coke 68 cents versus 64. Sales 11 billion versus 10.8 billion. Operating margin slightly higher than expected. Unit case volume grew 3%. Everything looks fine. And fine in this earnings season has been just that, fine. And if you're doing okay, they've been rallying you. One thing to consider again, Coca-Cola is a defensive stock, sometimes moves opposite the market. So market quiet today, not doing anything, so probably having zero impact there. I think you do have some major resistance up here on Coke at 65. I'm just looking at the longer term chart. Couple highs, couple pesky highs around there. We're there right now, 64.99. So you got some resistance right here. But the Procter and Gamble, if we're just taking leads from that, they had some resistance at 155, and it blew right through that. It probably helps that the market was a little bit leaky, and again, Procter & Gamble can move opposite the market, but it blew off the hop and just kept going to 158 before pulling back. So right now, this market is playing defense, and Coca-Cola is definitely a defensive stock.
Yeah, very big move, up 94 cents. You're mentioning that pesky 65 area, gapping up a buck, which is very unusual. The dailies really don't give you much here. At 64.65 is a high. So I guess if you want to play the Procter and Gamble on this one, and you're buying it off the hop, maybe give yourself a little bit of room. But I would be one of these where if we did open 65 bid, you went up to like 64 and a quarter, 64.30, and then you came back down, I'd be a little bit cautious. Also, what a nice run going into the report. The street just leaning the right way. We moved up from $62 earlier in the month, so this is a big move for Coca-Cola. All-time high comes in at 67.20. Don't know if that's on the radar. It's bringing Pepsi up too. Now, Pepsi reports later in the week.
Tuesday.
Yeah. Yep, but that's always been a strong a strong stock, monthly resistance here at 186.84, and you're coming up on that right now. So, man, oh man, these defensive stocks looking good. And is it good that the defensive stocks are strong, Dennis? I
Well, no, we
mean,
talked about this on Friday, and it is somewhat concerning. And just talking to people over the weekend here, construction. I have a lot of friends who are in construction, and multiple people saying, you know what? It actually, is finally starting to slow a little bit. Like they were talking about, one gentleman was talking about, builds, and he's lost a couple builds, and not to other contractors, just people aborting projects. So you are seeing a little bit of slowing, different sectors, pockets. It does feel a little bit quieter. It doesn't feel like we fell off a cliff, though. It doesn't feel like the consumer is dead by any means. But I think the consumer is being a little more cautious here, too, which makes you think going into these earnings. It's going to dictate. I mean, the next move, whether it's higher or lower, is going to be dictated by all the earnings that we have coming this week, Joel. And they're big ones. Google is Tuesday, Microsoft Tuesday, Visa, McDonald's on Tuesday. McDonald's always does do pretty well. Wednesday's Meta, Boeing, Roku, eBay. Thursday, Amazon, Intel, First Solar, which we just talked about, MasterCard. You got AbbVie and Gilead. You got Snapchat. Then Friday, ExxonMobil and Chevron. So you got some big guns. I think Google and Microsoft Tuesday are going to help to dictate which direction we're going. Tesla, obviously, didn't help the overall market. It's still leaking, and it's down here today. And I think, people are like, ooh, maybe are we just, too bullish here, with the recent rally that we've had, not just in Tesla, but talking about the overall market. Maybe there's some profit taking into this. Microsoft looks a little bit, interesting here. It's downgraded today by BNP Paribas. So it's actually trading down about $1.50 ahead of the earnings. But again, all it's going to matter is Tuesday night when we get Google and Microsoft.
yeah, Ben Berger has an interesting question here. He says, why is Coca-Cola better than treasuries? And I mean, right now, you don't get any capital appreciation in the treasuries, and you're getting that in Coca-Cola.
Well, I've argued the same thing. If you're going to be, and there is a little bit of capital appreciation been happening here, but again, if you go into a market that's tough, if you're playing defensive in this market, I personally don't know why you're playing in discretionaries. I know they're at highs, and if you're a momentum trader, you're just going with that flow. But if you're an overall investor and you're like, well, I'm a little bit worried about this market, I better buy Coke and Procter Gamble. If you're worried about the market, buy treasuries, because if the market gets really ugly, they'll hit everything. So treasuries are the safer bet. If you are bullish, why own Coke? Why own Procter Gamble? Why not own the mega caps? Why not own the technology companies? Why not own the cyclicals? If you're bullish, I'm still neutral, playing it cautious. I actually sold a little bit of stocks into Friday afternoon's rally. We had a pretty good rally Friday afternoon off the lows. I'm nervous, man. I can't break it. I know the technicals are saying we're okay. I know, there's, reasons to think of optimism. Inflation is coming down. But I just keep looking here, and I'm still just a little bit nervous. I have deployed a little bit of cash. I bought a couple stocks. I bought a little wee bit of Disney. I bought a little bit of IWM. I bought, what else I bought? Oh, yeah, I bought the Palantir, which has been not good at all. It was good for 3 days, and then it started to leak here. But, overall here, I'm still playing it cautious, man.
Yeah, I mean, look at this XLP. I mean, this thing is just been on a
That's the
steady.
market playing cautious.
Yeah, yep. The
And I
overall market.
think you see, Joel, certain, funds can't just go all to cash. So if you've got fund managers that are sitting here, they have mandates. They got to own so many stocks. But if you have some fund managers that have some flexibility, they're like, well, I'd like to own treasuries, but I can't do it because, I've got to own some stocks. So you see them going to consumer staples instead. So you as an individual that don't have any, specific parameters that you have to follow can do whatever you want. But the fund managers, some of them can't. Some of them have to buy stocks. So some of them are playing conservative stocks. But you can see clearly here, gold still holding on fairly strong, although it's starting to look a little bit toppy. Silver holding on fairly strong, but starting to look a little bit toppy. Consumer staples just breaking out on Friday there. Healthcare stocks have done very well. Besides UNH, which had a terrible week last week, overall, we know Johnson Johnson's come back and some of the healthcare. Merck, Lilly, still up near the highs. I mean, this market is still playing defense. If this market turns to offense, maybe things change. But I think we got to wait. I got to wait to see what Google and Microsoft say.
Okay. Speaking of good news and drugs, and look at Coca-Cola just blasted over 65 here. So a relentless bid in Coca-Cola up 1.75%. Lilly, we got some good news out of Lilly here. They're selling Baqsimi, I believe, worldwide to Amistar for 500 million. They're going to get an additional
Which stock is that?
125. Lilly, LLY.
What are they
Uh,
selling?
It's called Baqsimi. It's for low blood sugars and severe hypoglycemia. This is probably something they developed with that company. And yeah, I mean, what's $500 million? I mean, that's not big to Lilly, but the market likes it. Up on only 6,600 shares, new all time high in
Yeah.
Lilly here. I mean, what do you? What do
I'm
you
really
think?
upset at myself because I liked Lilly on that recent pullback in February and March. We went all tech crazy and we started selling off the companies, the solid companies like Lilly down 360 to 310. And I was thinking multiple times at 320, I was like, I should buy some Lilly. I should buy some Lilly. Give Kramer some props. We beat him up on this show sometimes, but he was one that was saying the same thing. He'd be buying this Lilly, and Kramer was absolutely right on this one. 320 to 388 here now in the better part of a month. I can't chase it now. But on pullbacks here, we know they have the weight loss drug coming. They're still working on an Alzheimer's drug. Lilly just fires on all cylinders. Management is excellent on pullbacks. I think I'd be a buyer on pullbacks.
Okay, I'll just give you. It's currently trading at right off the session high of 389. I guess you just got to think about 390. Maybe possibly. I don't know about today, but you get into these whole numbers, just migrate itself up to 400. But just up on some news today. We got some other stocks trading up ahead of earnings. We got Meta. Trading up $1. We have earnings later that week. That's up $1.03. I see some good resistance up here at the recent. I'm not going to call anything good resistance in this one. The recent high of the move has been 222.11. What has been the closing high of the move? Boom. That was made on that day too at 221.49. I mean, what are you thinking if you've been, you picked this thing up? Let's say you picked this up in double digits, right? Back in at the end of last year. Here you are headed into a major report. Haven't taken back 50% of the big break hit yet. Meta, I mean, still looking strong. Gap and go off that last report.
I think I would take profits into the report, but I would have taken profits a long time ago. So it's when stocks double in 3 months. I ring the register normally. So that's a pretty darn good move. I mean, it's back to where, remember, we were worried about TikTok eating their lunch. And we were worried about so many other things. And the stock went from 350 to $100. Definitely got overdone. We got under 100. Hindsight capital is always 2020. But when we got under $100, it just got silly. I mean, this company's still making a lot of money. And, when it was getting down to a PE of low teens, I mean, and even approaching
Lower.
single digits, it was just a cheap stock. So it's revalued itself to probably where it should be. It's definitely not cheap as it was. It's still not expensive stock. We got to see what's happening here. I mean, we're gonna get their earnings Wednesday. I wouldn't be surprised you do see some ring the register, but it's hard to talk all these stocks technically when you have Google and Microsoft on Tuesday night and Meta on Wednesday night. So much fundamental information that is going to trump all the technicals coming in here. So hard to just be a technical trader on these. If you're long, maybe use stops, but again, you don't want to see all your losses evaporate here. Just for fun, let's go and look at what the options, let's go look what they're pricing in for the expected move. We do that again for the newer listeners by looking at the calls and the puts. I usually go to the weeklies, look at the closest strike that I can grab. So the stock closed at 212.89. If I go grab the 212.50 weeklies expiring, I see that the calls were going for about $10. 990 to 1010 was the closing spread. And then the puts were going from 930 to 945. So you get just under $20. It looks like about 1950 is the expected move. That's a big expected move, Joel, 1950. So they're expecting an 8 or 9% move in Meta. I don't know if it's going to have a move that big, but that seems like a big move. I don't know if I'd be buying that straddle.
Yeah, I mean, for this, I mean, let's say it does get a big pop again, then whatever, shorts will be buried. And if someone, held it through the report, been holding it, could be, a little extra meat on the bone. The recent high has been 222.11, and your next monthly high comes in at 224.30. But like I always hesitate to like get, try and pick tops in these things because what? You went from 380 to 90. That's almost a 300-point move. Let's call it a 150-point move. You tack 150 on to 90, and you're looking at, 240, 250, that area. And if you don't think a retracement like that can be done, I mean, look at Nvidia. I mean, look at that thing. That's taken back more than half of its move.
Nvidia move has been nothing short of incredible. I mean, we have now, but again, now you've come to what, 55, 58 times earnings here on Nvidia. I mean, when it got down into $100 and was 29 times earnings, cheapest Nvidia has been in a long time. Now it's like 60 times earnings on Nvidia. How do I justify that? Again, trade anything. We're not talking as traders here. I trade Nvidia all the time. So you can trade with momentum, you can do all those things. But as a long-term investor, I'm a fundy guy. I'm like, I don't pay 60 times earnings for stocks. I learned that the hard way back when I started investing in 1999, and I watched the portfolio go up, 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 and then just implode and die in 2001 when all those valuations contracted very quickly. So we saw the same thing happen in 2007, 2008. Valuations, sometimes stocks grow into the valuations, and that's fine. That's great when they do that. But a lot of times they're just overvalued. Nvidia is just an overvalued stock.
All right, let's keep on the good news, and then we'll get to some bad news here. ALB bouncing back a little bit
Oh
after that
gosh, this is one of my worst
shellacking.
stocks. We need to stop talking about this stock. Every time we talk about it, it goes down another $20. We know it was the
Okay.
lithium news on Friday. Absolute disaster. LTHM, which I own a bit of that as well,
Mhm.
disaster as well. All the lithium stocks getting the beats as Chile was coming out talking about, their lithium, and their own companies. So, I mean, competition coming for them. ALB is a super cheap stock. Maybe it's cheap for a reason. I don't even know where the PE on this thing is. It may be even approaching single digits, the PE on this thing. ALB makes some money. I'm going to go look right now. But do the technicals, Joel. I mean, it's ugly.
Yeah. Whew,
No
whew,
reason
whew.
as a trader to buy this kind of stuff. As a fundamental investor, I take some heat. Sometimes it works out in the long run, sometimes it doesn't. But right now, this stock is just flat out ugly.
Yeah, nice move off the low. It did have some monthly support there. No, the monthly support was closer to 170. Didn't quite get there yet. 171.82. I think you'd rather see like a higher low and then maybe a couple quiet days. And then I don't know why this spiked at 4 a.m. open 180. That was only on 100 shares, but I don't think you could really get too optimistic about this stock, at least until it takes out Friday's high. And then there's a small gap in there. So there's a long ways to go to get to Friday's high to turn over. Coming back on the downside after you made a move off the low like that. I think you'll find support if you get to that closing price down at 173.75. So that's taking a look at ALB.
The forward P at ALB is now 6. And again, this is one of your biggest lithium, makers in the world. So if you believe in EV, I think eventually this thing turns around. But as a trader, there's no reason to catch the falling knife. Wait till you get a double bottom. Wait till you get something else. I'm in way too early. I was up in this trade. I had some momentum going. Some part of me keeps thinking, like I've done so well with my trading over the years, and I get this question so much. Why do you even have a long-term investment portfolio? If you can trade as well as you do, why not just trade it all? And part of me thinks, maybe I should be doing that. The reason I haven't done that for all these years is that I had bright trading. So I wasn't using my own capital to trade. So I had my own capital also, making me money on the investment side. So I was like, I'm making money trading using bright trading capital, and I'm making my own money, using my own money. So if I'm picking up and I don't know what I was making on bright trading, but it was significant on a percentage basis, it'd be very significant. But again, I was using prop capital, so percentages are meaningless on that because you're not using your own money. But if I can make an extra 6, 7, 8% a year on my own money, that's just gravy. That's money on top of it all. It's a bit different story for myself now because I've left bright trading last year for tax purposes and because I'm, I've got enough capital to trade on my own. So part of me just thinks maybe I should just sell all my stocks, put it all in my trading portfolio, and don't ever invest again. But then I look and I think, well, some of this passive income that I've earned over the last 20 years has been significant as well. So, and I know, it's hard sometimes as an investor. You're like, oh man, I'm getting killed in this or killed in that. But if you still buy good companies at reasonable valuations, usually eventually they do turn around. Not the Bed Bath and Beyonds, which we have a segue to that,
We'll
which
get
is obviously declared bankruptcy over the weekend. But buying good companies at reasonable valuations seems to work. Merck was one of my best buys ever, long-term buys. And I bought that back, and you can go to the charts, Joel. I'm just trying to teach a little bit of long-term investing here as well. I bought that back, I believe, in 2010. And I think I paid about $38 or $37 a share. So if you go and look at the charts, and if you can scroll back that far, hopefully, you'll see. Yeah, you'll see right in there. Yeah, so about 35 probably. It was after the financial crisis, so it was right in there. And I can remember buying at $35 or $37 and it going down to 29. And I'm like, man, why did I buy Merck? You're looking at it, but yeah, just hold on, you hold on. Eventually, the stock obviously turned around. It was the PE at that time. The dividend yield on Merck at that time, I think, was 5 or 6%. The PE was sitting down there in single digits. And, eventually this story did turn around. Lilly was the same thing. Lilly was one of my best buys too. I think I paid about $30 for Lilly, bringing up same time frame about Merck and Lilly because the drugs were just so beat up. And you can see that Lilly, it was ugly for a while. 2010, 2011, I was down 10, 15%, 20% on this thing. But eventually it worked. Eventually, if you're holding good companies at reasonable valuations, it seems to work in the long run. I do believe that ALB is a good company at a reasonable valuation here right now. So I do think if you're buying this and not looking at it, and maybe it's going to go down to $100, maybe it's going to get uglier. Maybe you want your timing to time a little bit better. Why catch the falling knife? So maybe wait for it to actually bounce and then give yourself a shot, make your entry better. But I do think eventually ALB, I don't think it's a zero. I do think ALB, if you think the growth in EV 5 to 10 years from now, is higher than it is today.
A couple things here, Dennis. Number one, you got to keep the long-term portfolio no matter what portion it is because it helps shape your perspective on the markets. And I think that whether you're wrong or right on some of these longer-term plays, you're constantly thinking about, longer-term moves in the markets, the rotations and the things that go into it. So maybe not all the investments work out, that well for you, but I think it's like your daily studying. It's giving you the perspective on the markets. Also, with the way you trade, I mean, could you triple your size that you're doing in stocks right now? Trading after hours in pre-market,
I
if you were
could.
applying it, yeah.
I could honestly probably make more money trading if I took every single stock that I have in my long-term investment portfolio, convert it to cash, put it in my trading account, and I might make more money. But then I do give up these, huge gainers. It's a trade-off. I don't know. I'm torn there a bit. It was a no-brainer was at break because I had this money. I'm like, what do you do with the money that you're making in your day trading account? You don't need that much at break because you're using Bright Trading's capital. But now that I'm on my own, I'm like, part of me thinks maybe I should do that. Maybe I should just become a trader because the timing of my trading. And again, I'm not talking to everybody out there. I'm talking to people who trade full time. There's some traders who have been very consistent for years. Sometimes, the alpha I extract from trading is way more than I do from long-term investing. But I don't put the time into the long-term investing. I mean, I don't have to sit there and, move and in and out and in and out and grind and grind and grind like I do in my trading account. I'm grinding in my trading account. I'm working my trading account. It's an 8-hour job. My long-term invest portfolio is like an 8-hour job a month. So if you're making more, some money there, dollars per hour maybe isn't that bad. I mean, I've had Apples and I've had MasterCards and I've done very well in the long-term portfolio over the course of my 20 years. Have I outperformed the market in the long-term portfolio? I've never really sat and analyzed it to really know that. I know I've done well at times. I've done, but I can guarantee you in my trading account I have. So I don't know. It's tricky. Do you have,
tough.
as you're a really good trader, the question is, do you have a long-term portfolio or just trade it all? I don't know. I haven't really answered that question.
It's a tough one. All right, so we kind of been given a little rosy scenario today about the earnings and everything, but there is caution. There's concern in this market, and this Tesla chart who, led us, the great January, the good February, the fall off back in March. Uh, did have the rally, but man, this gap down after earnings here, and it's not acting like the Tesla of old here. And I looked at this chart on Friday, and I just look at this 140 to 160 area. There's just no memory in here, so you know, um, if you're looking for a stock that's been a big leader and on the upside here, this Tesla chart down again today, down a buck 68. There's not a lot of love. I mean, there's a lot of news and everything that's going on, but I mean, how much? This has to make you a little bit cautious on the market. Looking at this Tesla chart.
It does. And I mean, it's not good that they didn't, start immediately buying the dip. Still holding the lows from earnings day, and that's important. But you don't want to see that 160 get breached. So I would say if you are buying the dip in Tesla, you absolutely need that dip. As a trader, you need that dip to hold. So 160.56, I'd say my stop out if I was long this, I'm not long it, but if I was, I'd stop out under 160. It's not a cheap stock. Some stocks you can buy and you can lean on valuation to a certain extent. Again, no, if you're in a cyclical industry, and ALB is cyclical as well. So, you can't just say, oh, it's 6, I'm going to be okay. Some of these, the PE could go up. If we go into recession, that ALB PE is going to climb rapidly because that E is going to go right down. But, in some cases, you can look and say, well, I do have some protection here. I don't think this is a zero. I don't think this company's. But when you get into situations in Tesla, you have some protection as well. But the protection is much lower. When you're trading 55 or 60 times earnings, I believe that's where Tesla is now. The value investors aren't touching it. Down at 100, the value investors started getting interested, and they would be interested. But at 163, the value investors are out. So now you're completely leaning on momentum traders and momentum and growth. And if the growth starts to slow, the growth traders, the growth investors say, okay, I'm out. And the growth, that last report was not great. It wasn't showing us this huge growth in Tesla anymore. It was actually showing the opposite there. So you're stuck in a hard place here with Tesla right now. It's like the growth investors are like, well, there's better places to be. And the value investors are saying, are you nuts? So that leaves you with this gap. And I always say when stocks go from growth and eventually all stocks trade on valuation, they become growth, growth, growth. But when the growth starts to slow, valuation starts to matter. You get this gap between the growth and the value investors. And that's where stocks can come in very quickly. We saw that happen with Tesla in 2022. Came down to reasonable valuations at 2023 when it got down to $100. Would I be a buyer of Tesla back down at $100? Probably. But at 163, it's still not very cheap.
All right, Dennis, I hope you're sitting down because I have some news for you that you're going to find very shocking. Triple BY is filing for Chapter 11 bankruptcy protection, trading down 25% at 22 cents. Say goodbye to Triple BY.
Yeah, officially over. I mean, again, these things go bankrupt. It doesn't mean it's a zero. It'll end up going to the pink sheets. It will trade for a long time. So bankruptcy doesn't always necessarily mean a zero, but it's 22 cents. I mean, the people who bought this even a couple months ago at $7 probably are not going to get their money back. I mean, Cohen got out just in time. We're talking Ryan Cohen, obviously, selling up there above the 20s. And since he sold, the stock has basically been straight down. So this story is over. Does it hurt the other meme stocks here today with the official? I mean, GameStop is trading down 30 cents here in the pre-market. AMC trading down 1%, but this is not a shocker. The writing was on the wall. We knew this was going to happen here. So I don't think it's like, oh my goodness, this one went under. I better sell all my meme stocks. If you were worried about your meme stocks, you probably were selling them well before this. So I'm not sure this just all of a sudden equals an implosion in GameStop and AMC.
I did see a movie this weekend, and you might be
What'd you see?
You might be a little surprised that I went to see.
You saw Mario.
No.
Okay, what'd you
No. After several hours of family debate, I went to see the movie Air. That's my Michael Jordan and
Yep.
my bad boys. But my daughter Dana told me it was a really good movie, and it wasn't all about Jordan. It was more about Nike, how they put the company together, how they went after Jordan. So, and also, that's an Amazon movie, and they went to the theater first, and then they're going to release it on Prime. So, I mean, not saying to run out and buy AMC or whatever, but Streaming has not completely killed. I think it's, people like to go. They let, it's down. Like to get out. They like to go see that. And
Yeah.
so I would give it. It was not a bad movie. Ben Affleck was in it. Matt Damon was in it. So I would definitely recommend it to if you want to see a movie on that. As far as
I
the
did
stock,
take my kids to see the Super Mario movie, which I thought was pretty good. So I thought they did a pretty good job with that. Obviously, I was a big Mario Brothers fan, so I probably appreciate it more than others if you didn't play Super Mario. But I have no problem with the movie theaters. The problem with AMC has always just been valuation. So but the problem is that it hasn't been a moneymaker in a long time either. So I don't like buying companies that don't make money.
Okay. All right. We're waiting for Tim Quast to arrive here.
Okay.
I did see AI got a downgrade here
Yeah.
from Wolf
The buzz
Research.
coming out a little bit here of the AI movement. We really saw this taken off a few days ago, and obviously not even a few days ago. I'd say a few weeks ago. It's starting to slow down a bit. Again, valuation does matter on some of these stocks here. AI, $18.33. So breaking down over the critical support of 20. You never want to see that. If we had money, Mitch, he'd give us all these others, but we do have our chat here. I know there's all these other smaller AI companies that I don't know the names. What's the SOUN one? Soundhound? Yeah, that one's come off here a little bit. I was playing Palantir for my AI. It's down a little bit too here now. Again, I don't think they've ever thought of Palantir as an AI play as a problem. So it never really got the love, and the big move up when the AIs was starting to go. I don't really get why it didn't get the love, but it never did. So I don't think it's going to get the sell off like the other ones did either. Although the charts doesn't look that great, I may actually end up getting stopped out on the Palantir.
I don't know
what are
what
those other little ones? BFRG. Okay, chat's awesome. Thank you, Eamon. CXAI. What's that one done? We're just looking. That just said AI. Yeah, it was 20. It's now 8. We know how these stories end on some of these stocks. BFRG. Is it over? I don't think the story is over by any means, but the story has cooled off now in the last few days. Could the story get hot again? It could. It could get hot. It could just be like an analyst upgrade. Maybe somebody says something. Maybe there's some decent reports and the market just gets hot again. So I don't think the story's over here, but it's definitely cooled off. And again, it's hard to buy some of these stocks in your long-term portfolio for the simple reason is that most of these companies do not make money.
Wide open between 15 and 20 here. So it went through that area in 3 days. If you're looking for more on the downside here, 1747 was your low on January 31st. But you know what? We always need to add more structure to this show, right?
I
And
like
what's
this.
a better way to do it than bringing on Tim Quast for Market Structure Monday? All right, Tim. How'd you like that intro there, buddy?
I'll tell you, that was some professional segue.
Oh, I know. Joel's getting good at this. Usually it's Money Mitch doing the segues because Money Mitch is off this week. He's on a cruise. We hope he's enjoying himself. But Joel's getting good at these segues too.
Yeah. Well, who do you think taught Mitch everything he knows, and you for that matter?
All right. I never learned though.
Mitch is out copying me. Sailing in the Caribbean.
Oh no!
Well, we all want to copy Tim Quast.
Yeah,
everybody deep inside just wants to live Tim Quast's life on the ski slopes, cruising. Oh, I'm over in the Mediterranean. Tim has figured out how to live life to its fullest here. Where I just sit in my trade cave and try to analyze whether I think this stock's weak or strong, or we got some supply and demand issues. I'm actually boring my life.
Okay, Tim, it's boring here. It's good time for you to take another month and a half vacation. New options trade today. What does that mean to traders?
Well, and people don't really think about this, that options expire and then they renew, and that it's enormous. And how I love to quote literature, theological sayings, that sort of thing. And so something comes to my mind. There's this great phrase from the book of Ecclesiastes in the Bible that says,
biblical on us.
It's not that I'm suggesting that, some kind of biblical apocalypse is ahead of us. I don't think so at all at the moment. But the race is not to the swift, nor the battle to the strong, but time and chance happen to all. There's more to that, but the way I think about this from market structure edge is you want to reduce the risk of time and chance. And so when new options trade, there is an elevated time and chance risk because you don't know what's going to happen. I can tell you that from a trading perspective, how this impacts us is that there's implied supply and implied demand. And that is what options are. So when they reset, there will be parties who are expecting to sell volatility or buy volatility, and there may be some difference between supply and demand. And how would we know? Well, you could look at individual stocks and see where it is, but the risk is that there's a supply-demand imbalance. And here's my key takeaway. On days like today, how the market begins may not be how it ends. And it's because of this. So you can't just look at the futures and say, well, the Dow's down 42 points-ish, and everything's muted and everything's fine. The market could be way up, could be way down, and it will be due to some form of imbalance between the supply and the demand for options, and it's trillions of dollars. You have to think about that during earnings, too. We got 1,700 companies reporting results this week.
Oh, my gosh. And we do here, Tim, and they're going to get some big ones. So we want to dive into the market structure on two of these companies, which are going to report tomorrow night. And they are Google and they are Microsoft. And these two stocks have been going kind of head to head here, which is so interesting. Usually they trade together, but they were trading opposite a bit because obviously Microsoft came out with the ChatGPT product and employing it and putting it into Bing. And people are like, whoa, if Microsoft picks up a few percentage points of market share on Google with their Bing product, all of a sudden, Microsoft. So now we're seeing Microsoft and Google sometimes go in opposite directions, which I find so interesting here. I'm really curious what your system is looking at when you look at Google and you look at Microsoft as they both report tomorrow night.
Okay, well, let's have a look at this. By the way, as you were talking about Chat GPT, talking about artificial intelligence, and C3 AI is a great read, and I just happen to have it up here. So if you're looking at this, by the way, traders, the chart may show you the same thing, but this is not awesome. This is terrible demand, too much supply.
Demand's near 1.
Yeah, if you're getting,
it ticked up. It ticked up
a little bit, but 5 is what you need to have enough demand to sustain price. It's the bare minimum to me. Doesn't mean things can't rise off of 1. It happens on occasion, but it's a way to think about that. Okay, so let's look at Microsoft first. And I do think that this is really interesting, that I would never have thought that cracks would show in the great Google wall, but they have, haven't they? It shows that it doesn't matter how big you are. It's kind of back to the race is not to the swift nor to the battle to the strong, because all of them can fall. And I think that Microsoft has demonstrated leadership in AI, and there are fissures in search for Google, which is the core of Google's value. I mean, it's a very interesting
all of it,
thing.
pretty much.
Exactly. So heading into earnings for Microsoft, this is not bad. It doesn't portend a big surge. And here's all I'm looking at, folks. This is price. So the gray part of the graph, just closing price. That's all. This is the green part is an algorithm called market structure sentiment. It's demand. It's just computing the contributions of different purposes and time horizons to price. And those things fluctuate. And you can measure that mathematically. It's right at 5. It has not been below 5 in the entire span of this chart. That's very good. This is supply. So supply peaked here, so price weakened. If supply rises, price tends to weaken, all other things being equal. But look at it right now. The supply sides are way below trend and demand is steady. They're not separating. So I'm not looking at that and saying, well, there's going to be a big jump, but it tells you people are very confident in Microsoft. This looks good. Clearly, people are not short Microsoft. Doesn't mean the price can't fluctuate, but all other things being equal, this will produce in the 2 weeks preceding, not preceding, following results, higher prices. All other things being equal.
Just
Okay, so
looking back here, and we'll test your system here, but it looks
Yep.
like it's going to pass this test pretty well here, because I'm looking at your top chart there, and you can explain, when you see, well, you can see when it was back at a 5, it looks like demand, when I started this chart. I'm trying to see, my eyes are getting bad here in the area, but it looks like at the beginning of March, we were around a 5, and we've just been upticking demand, been slowly upticking here. And you know what? Prices went up since then too. So, I mean, sometimes do you just look at, what's at a 5 and climbing, or should you always should look at the supply side as well?
It depends on what your aim is. If you want to buy what I would call value or low volatility, you want things that are at 5 with declining supply. Coke and Pepsi reporting results this week. Both of them have those. Yes, and the data showed exactly what you would expect. Now realize, Coke is not growing. Coke is increasing prices. That's what drove PE or EPS for Coke. You have to realize that. So it's not selling more units, it's selling units at a higher price, but the supply demand equation for Coke is very good. But this is the key. If demand rises over 5 and supply declines, we look for this condition, we look for it mathematically. We run a divergence calculation. So we can find that kind of stuff and say, well, that's where you want to be. And that's where the price gains came. When supply rose, then the price stopped rising. It's a very consistent theme. It's not perfect. There's no perfect solution, but it's so simple to be able to see supply and demand balances and imbalances that even I can understand it. That's the key. So now let's look at Google. So how does Google compare? And I'll take the non-voting shares. I think the non-voting shares are a better reflection of shorter term behaviors, interestingly, and there will be differences between them. And who's using the non-voting stock? Well, indexes and ETFs in large part for their rebalances. Doesn't mean those firms aren't voting on outcomes, but if you're going to move in and out of things, you're going to use Goog over Google. So it's an interesting read on what will happen ahead of results. Well, it's not as good, is it? It's not. It's fine. There's the same condition exists that for Microsoft, that it spends a lot of time above 5, but it had a little break below. A little break below 5. And here you have rising supply and demand that is steady. Microsoft has falling supply and demand that's steady. If you're going to pick a horse at the moment, you pick Microsoft.
And maybe that makes some intuitive sense. I mean, again, you've got the nervous people out there. Even myself, I sold my Google after owning it for 15 years. So I was nervous about Microsoft. I hear this stuff. They pick up a few percentage points of market share. It's a big difference to both Google and Microsoft, because Google is basically a monopoly on search. So if all of a sudden people are like, I'm going to bing this with this ChatGPT and I'm going to get better answer, I'm like, that's a scary thought. And I've owned Google in my long-term portfolio I think I owned it for 12 years, and I've actually sold it here now. So I'm like, I'm a little bit nervous about this. I took a huge, paying a big tax bill in that Google to do that. So I'm somewhat nervous about it.
Yeah. Well, it's at the moment it's justified. And the beautiful thing to me about market structure, and I repeat myself, not because I'm becoming mentally decrepit. That has already happened, but because repetition is the best form of emphasis. Market structure reflects all known inputs. You don't have to go know what all the hedge funds know, what the short-term traders know, what the stock pickers know, what the asset allocators know, because you can just look at it here and it will tell you. That's how I think about it. I realize I'm a market structure, nerd, but I like this view.
Let's take a look at Meta. That's also due to report this week. We
Wednesday.
talked about we also talked about the straddle on that being $20 would be a pretty big move here. But boy, just the way this thing's been trading, I have to say the market structure is gonna look pretty good on this one. Tim, what do you have to say?
I agree. While demand has weakened some, the best gains came when demand was well above 5 and supply was generally below trend. There's a cause and effect. So this little rise right around March options expirations and index rebalances, that's to meet needs, but it slowed the price for a couple of days. Here's the change. Soon as demand weakens and supply rises, that's a great time if you're short term to stop, because we got no further gains until supply dropped well below trend. Then you can get them again. But this is a classic setup that we have. In fact, this is named for one of our edge users, We call it the Hicks rule. If demand is either rising, has hit 10, or is very steady, and day over day supply falls, there is nearly a 100% chance of producing a gain of at least half of the volatility for that stock. So I'd look at this and say there's a very strong chance. Again, there's also a small percentage chance that it declines, because options will reset here. But if you look at this and say steady demand, falling supply, I would go look at it in a portfolio and say, well, what is its intraday volatility? That's how we read this. And I'll go into the Benzinga April 24 portfolio, I'll put it in here, and look at Meta and say, well, how much might I make? Well, not a whole lot, but you could probably make a somewhere between a 1% and 2% gain on earnings out of Meta. You say, well, I don't know if that's that interesting. Well, it beats the heck out of a decline, and you have a very high mathematical opportunity to produce that gain. And realize that's 1/255th of a year that you're making 1% or better, because there are 255 on average trading days in a given
I take
year.
1% gains all over the place. I mean,
Exactly.
and in my own personal trading, and obviously I do a lot of commissions, I do a lot of production. I'll enter a trade if I have a 0.1% edge on any given trade for my day trading. If I feel like I have a 0.1% edge, so 1/10%, I will enter the trade for that. I don't enter if it's under that, because I'm retail now. I do pay commissions. There's some considerations there. But I feel like if I have a 0.1% edge, I will enter a trade. So I'll enter trades for 1% edges too. What I would say is, though, it's hard to enter a trade 2 days ahead of earnings for a 1.9% edge, because it's predicting the options. We just looked at them a few minutes ago, and they're predicting almost a 10% move in this stock. So there's going to be a big move potentially in one direction or another. But you still let's just say scenario analysis here. How much does the market structure change if the stock beats or disappoints? Does it change rapidly? Or does this dictate kind of maybe even what happens after it reports? So let's say it reports and misses and dips. Because the market structure is so strong that the dip is more likely to be bought?
The answer to, there are two
multiple questions there.
Yeah, so there are two things to keep in mind. If a company reports before new options price, we have found this statistically to be true. The damage lasts longer. Why? Well, because the new information will be priced into the new set of options, and the options will be priced lower, and it has a drawdown effect on price. If you report after they've been priced, but you still have, if those options have effectively, if they're monthlies, 20 days to run, there's a lot of opportunity for people to come in and trade those options profitably, and stocks do better. So we always counsel public companies, report after the new options are priced, because the damage of a miss will be diminished. That's one factor. Then we look at behavior. While all behaviors can set prices, it's one of the core principles of Reg NMS, no preference for exchanges. Fast traders cause short-term damage because they don't actually own anything. So if you have a day where the stock's down 10%, 15%, and the only behavior is fast trading where there's no change in ownership, well, it can bounce back very quickly. If it's stock pickers, 3 of these have, actually 1, 2, 3, 4, 5 of the 7 stocks here are being led by stock pickers, which is unusual. That tells us there's a lot of focus on what these companies are going to report. Active money prices the market only less than 1 out of 10 trades. Active stock pickers are less than 10% of daily trading volume. Fast traders are over 51% of trading volume. So if they come and go and hammer volume and move the price, but they don't actually change the real ownership of the stock, can recover very quickly. So
real quick, Tim, we're coming up against the clock here. But coming up to a big earnings week, more risk or more reward this week for traders?
Quick answer for you. This is the supply demand balance in the S&P 500.
Let's see it.
So demand actually looks pretty good. That's those little squares. That's options expirations. So that we just got through that. New options trade today. Does it go up or down? I don't know. I don't know the answer to that. Supply is way down. It has not reversed course. You look at that and say, well, it's not terrible. The trouble will be if we get to Wednesday or Thursday, we're out of this whole options expiration cycle, new options trade today, counterparties true the books Tuesday. Wednesday is reality. If this is rising and that is falling, then we're in trouble. If not, we're fine. So that's a wishy-washy answer, Joel.
I love it. All right.
The calm before the earnings storm, and it's also
Exactly.
going to dictate the next move.
Yeah.
Okay. All right, Tim. So we're gonna get you're gonna miss a couple weeks, but we'll be following the market here real closely.
We will
Tim,
see you we'll see you next week, but then I'll be out for 3 weeks.
Okay.
Where
So
are you
I'll
going
see you
this
next month.
time? Where are you going?
He's
Greece.
going all out.
Oh
Greece.
my gosh,
go
man.
sail
I
and
just need a
spend 3 weeks
taste
in
of
Greece.
Tim Quast's life just for like a week. This guy, man, he knows how
All
to
right.
live it up. If you want to look at Tim Quast, live your life like Tim, because he enjoys life. Work hard, play hard. Go Tim Quast.
That's right.
All right,
That's
Tim.
good. Life's
All right.
short.
Thank
Thanks,
you.
guys.
Thank
Have
you
a great
very
week.
much.
Thanks,
So S&P's coming all the way back to unchanged here on the session, 56.75. That was your closing price. This is the first time we've seen this in pre-market trading here. We'll see if we can get to yesterday's high. That would be Friday's high of 41.61. But we got 5 minutes left, and you know what time it is now? It's time for our TradeZero segment. Okay. All right. Here we go. We got the TradeZero dashboard up here.
We usually go to the losers and then the winners. Let's start where winners or losers. We'll start with the losers today. So Joel's going to go to the net losers. This is what's down the most out of some of the big companies that we watch. First Solar leading the charge. We already talked them. They got the downgrade from Citi. BNTX is down $5 here. I did not look at the news on BNTX. I've been a fan more of Moderna than BNTX, and I've talked about that potential for a pair trade of long Moderna, short BNTX. Let's go look what the BNTX news is.
You know what? I am not seeing any news in BNTX. Boom. Since maybe you could find something here, but
I'm going hunting.
Yeah, you go hunting. Well, I will take a look at the price action. All right, the technicals are ugly here. We've come off this 130 area extremely hard. Trading, you got a step down seller here. 113 is the low of the pre-market session. Do I have anything for you? Yes, I do, folks. If you're looking for a potential with a capital P, potential support point, BNTX, that comes in at 110 even. That's $3 away. Triple D, you got the news on it.
Still hunting here, actually, but there is some drug news. Just trying to all this I don't understand as I'm reading some jargon.
All right, First Solar. I just want to say that that downgrade to sell, which is a nasty word on Wall Street, that's still working its way down here. Pre-market low just came in at 210.51. We mentioned a couple lows under the 210 area. So if you're looking at the next daily low, 208.01. Micron here. There's a big stock trading in there, and
one of my worst trades of the month was Micron, and I was short, and just so happened to remember I got run over on that. I don't even remember the news, but it went from like 58 to like 64 overnight. I was like, are you kidding me? Anyways, I took the brunt. That hit my month hard. That Micron trade. It was an overnight trade. I don't even remember what the news was on it now. It was like, it was the Samsung. It was the Samsung that
Samsung lowering demand, lowering supply.
And then they thought that's good for Micron. It's leaked it all back. So it's come back. It's taken about 10 days, but it's now leaked away all those gains here. It keeps topping out in the same spot, just struggling. $63, $64. Keeps struggling.
Oh, look at that on the monthlies. Holy mackerel. Look at that area. I'd see 3, 4, 5 different highs on the monthlies there in Micron. Trading in the red, 59.50. I would say if you've been waiting for a gap fill, I think that's the day you got tan, Dennis. It'd be a tan. Gap fill at 59.15 would be a gap fill. We're not too far away from that. Let's do one more on the downside here. And man, oh man, I'm seeing a lot of China stocks here. I see Baidu. That's traded down $1.16. That's been straight down. Pinduoduo.
Ugly.
What's going on in China?
Well, I don't know, but we've seen them give back basically all of these gains. So we said this last week. You've pulled back enough now here that, you look at Baba's giving back over half the move. Baidu's giving back the entire move. JD just continues to make new lows. I still feel like the geopolitical risk, which keeps me out of these stocks, is showing up in the stock charts. And again, if there was an invasion of Taiwan, these stocks would all gap down 10% plus on that day. I don't think, maybe even more. I don't think that's imminent here, but it's not a zero.
Never know.
It's not a zero. Like, it's not a zero probability. Is it a 50% probability? I don't want to put that high either, but it's there. And it's what keeps me out of China. I have very little China exposure, and I'm scared to buy these stocks. I'm just scared of the tape bomb of saying something that even makes you think about war. But I don't think it's off the table, and I think that's what's being priced into these China stocks here once again. Taiwan Semiconductor has come off. You can say it's slowing demand. You can say it's a lot of things, but I just think there's a lot of people who are nervous about the geopolitical risk in owning China stocks.
All right, let's accentuate the positive here. Let's go to the stocks that are making a move to the upside here. And what's catching your eye here, Triple D? Top of the list, ASML. We don't really talk
That's a
about
money
that.
Mitch stock, though. He talks about that one every once in a while. I don't trade it very much because it's an ADR, and why that I don't trade that is because it's pricing overseas. So when I'm trading ASML here, I'm trading it on the secondary market because the primary market is overseas, and the high frequency traders are just keeping the spread. So you've always got that spread. So there's not a lot of like real action in there. It's mostly just like what Tim would say, that fast money action that's keeping that spread. And if you look at the algorithms, you can see them automatically adjust their prices as the price moves in Europe. They automatically adjust. And they're trying to pick up a 40-cent spread on you. I don't like paying that 40-cent spread. Yeah, it's a $600 stock, but there's other places to be. So it's difficult to trade these stocks when you're in the secondary market, and that's what we are. And that's why I don't trade ASML.
How about ENPH moving the opposite here at First Solar this morning? It's been a serial underperformer here, but boy, you got good support at the 225. Is that 225? No, that's the 220 area. Trading up here on 8,000 shares, kind of a tight range. Maybe take a look at this
Something about
227
new
area.
microinverters. I'm just looking at the pro
Oh, the
headline
new,
there.
yeah.
Enphase launches new IQ8 microinverters for high-powered solar modules in Spain and Portugal. That headline broke at 8 o'clock. So it's got a little bit of a lift on there. We have seen this ENPH and First Solar going completely opposite directions.
Oh,
So,
yeah.
if you're pair traders in First Solar and ENPH, that's been a tough, pair because they seem to have no relationship whatsoever. They go opposite ways. But we're starting to see oil break down here right now. If you're wondering why, we're starting to see the S&P just leak back a little bit here, which we haven't talked about, is oil just starting to leak here a little bit this morning. Not a massive breakdown, but oil definitely leaking here this morning.
Okay, all right. We 9:02 here. We're gonna wrap up the TradeZero segment. Be sure you go over to TradeZero and check out that platform. Triple D. I thought one interesting comment Tim made is what you're seeing in the pre-market may not what you see in the actual regular session. We've had a really nice rally here. We seem to hit a little resistance at the close here. It's just going to be another day of wait and see in the S&P 500 index futures.
Yeah, I think so. We're in the calm before the storm. I mean, if we just look at the earnings calendar, yeah, we had Hoch today. I mean, we can go and look. Bank of Hawaii just reported, and it's getting hit, so it's down about $3. But actually, it's just on some odd lots. It hit originally when they reported, and it's actually bid back up. It's only down 2 right now on the bid. But if you look tonight, you got a few, you have FRC, which is probably honestly wouldn't normally be the highlight of the night, but it's going to be the stock that everybody's looking for. We had a good pop in WAL last week. We talked about a potential pair trade with some of the regionals that were really beat up, getting a lift. FRC has absolutely done that. Went from 1270 to 1450, which is a really nice 3-day move off the WAL report. So let's see what FRC says. I mean, I wouldn't hold it long through this report, but it's going to be a very important report tonight for the regional banks and for the KRE itself.
Okay, all right. We're going to sign out here with the S&P's down $1.50 at 41.55 and a quarter. We mentioned that unchanged at 56.75, and let's see if the bulls could push it through 41.61. That was Friday's high. On the downside, this 41.35 area, 41.35, 41.40. That's been your lows for the last 3 or 4 sessions. So we know where the bulls are defending, and we'll see if the Bears make a stand. So great job today, Triple D.
Thanks, Joel.
Everyone, good luck out there. Back with you guys tomorrow morning.